Bitcoin and cryptocurrencies, a passing fad or the future of the economy. Have you ever wondered if Bitcoin and cryptocurrencies are just a passing trend or the beginning of an economic revolution? While some are amassing extraordinary fortunes, others see the market as a house of cards on the verge of collapse. However, one thing is certain amidst this debate. Never before has a technological innovation sparked so much curiosity and impact in such a short time. We are witnessing something that challenges not only money but the very concept of value. But are we ready to understand what lies ahead? What are Bitcoin and cryptocurrencies? Cryptocurrencies are among the most remarkable innovations of the digital age. But have you ever stopped to ask yourself exactly what they are? Bitcoin, the first cryptocurrency created, was launched in 2009 as an intelligent response to the limitations of the traditional financial system. Essentially, cryptocurrencies are digital currencies based on an innovative technology called blockchain, which functions as a public, decentralized, and secure ledger. What's intriguing is that these currencies have no physical form but exert significant influence on global markets. A practical example is the ease of transferring funds between countries without relying on banks or exorbitant fees. This revolutionary concept emerged from the need for financial autonomy. Unlike traditional currencies, such as the dollar or euro, which are controlled by central banks, Bitcoin has no central authority. This means that no institution or government can simply print more Bitcoins, creating a sense of scarcity similar to gold. Moreover, its functioning is based on mathematical and computational phenomena, making it trustworthy and resistant to fraud. Who would have thought that a computer code could have such a historic impact? A fascinating aspect of Bitcoin is that it was created by a mysterious figure named Satoshi Nakamoto. To this day, no one knows who this individual or group is, adding an element of mystery to its origin. However, what is not mysterious is the impact it has made. In just over a decade, cryptocurrencies have gone from a technological experiment to something that challenges traditional economic structures. In fact, major companies like Tesla and PayPal have already started accepting Bitcoin payments, showing its growing influence. It's essential to understand that cryptocurrencies are not limited to Bitcoin. There are thousands of others, such as Ethereum, Solana, and Cardano, each with unique features and innovative applications. For instance, Ethereum allows for smart contracts that automate business processes, while Solana focuses on fast and cheap transactions. This shows that we are dealing with a vast and dynamic universe where technological creativity knows no bounds. Still, this innovation comes with its challenges. Cryptocurrencies are famous for their extreme volatility. Who hasn't heard of someone who became a millionaire, lost everything in just a few days? This is part of the game, but it also raises important questions about their security as an investment. The question is, how far does this roller coaster ride go? And, most importantly, how can people protect themselves while navigating it? To understand the future, it's crucial to know the past. After all, Bitcoin emerged during a global financial crisis in 2008 as an innovative response to banks that had lost the public's trust. Its goal was simple: to create a decentralized and transparent economy. However, is this ambition truly viable, or are we just creating a new bubble? This is just the beginning of our journey into the world of cryptocurrencies. Understanding their foundation is key to exploring deeper issues like their sustainability, risks, and, of course, the incredible opportunities they might bring. Let's embark on this adventure of curiosity and discovery together. The rise and fall of Bitcoin. Cycles of boom and bust since its creation. Bitcoin has been an extraordinary phenomenon in the history of finance. However, its path has been far from linear. When it was launched in 2009, each unit of the currency was virtually worthless. The first significant rise occurred in 2011, when it reached about $30, only to plummet to under $2 in the blink of an eye. This pattern of rapid growth followed by steep drops became a hallmark of the cryptocurrency world. Interestingly, this did not deter investors. On the contrary, the cyclical nature of Bitcoin is one of the factors that fuels its popularity and mystery. One of the most significant periods was in 2017, when Bitcoin's price exploded, hitting an incredible $20,000 per unit. It was a historic moment that attracted investors from all corners, many driven by curiosity and the greed for quick profits. However, what rose so quickly crashed even faster. The following year, the price dropped to around $3,000. For some, this was proof that Bitcoin was a bubble ready to burst. For others, it was just another buying opportunity. If we take a closer look, these cycles of boom and bust are not just random. They reflect a combination of extraordinary factors, such as changes in government regulation, technological adoption, and even the general market sentiment. A classic example was in 2021, when Bitcoin surpassed $60,000. This movement was partly driven by influential companies like Tesla, which started accepting the currency as payment, and by the launch of Bitcoin-based ETFs. But once again, after the peak, the market saw a significant retracement. These cycles generate fascinating mysteries. Why, even after such sharp declines, does Bitcoin continue to attract new followers? The answer may lie in its intelligent design, which includes a mechanism known as halving every 4 years. The reward for mining new Bitcoins is halved, reducing supply and usually increasing the price. This phenomenon creates a sense of scarcity, much like gold, reinforcing the coin's appeal as a store of value. Another factor to consider is the psychological impact. People see boom cycles as extraordinary opportunities, while crashes are often viewed as periods of adjustment rather than permanent collapses. There's a valuable lesson here. Understanding Bitcoin is not just a matter of technical analysis, but also of understanding human behavior. After all, we're dealing with an asset that, by its very nature, defies traditional investment logic. Still, Bitcoin's history raises an intriguing question. Are we witnessing a sustainable pattern or a new bubble about to burst? Some analysts believe the cycles are part of the market's maturation, while others warn that extreme volatility could be its greatest enemy. What's curious is that, regardless of who's right, Bitcoin continues to hold an influential position in the global economy. These highs and lows provide a clear lesson. The world of cryptocurrencies is unpredictable and fascinating. For anyone thinking of entering this market, learning to navigate these waves is crucial. And of course, it's impossible to discuss volatility without delving into the next topic: the risks and challenges of investing in cryptocurrencies. The risks and challenges of cryptocurrency investment. Investing in cryptocurrencies might seem like a smart and promising idea, but this universe carries a series of challenges that can't be ignored. One of the main risks is extreme volatility, which, while attractive to speculators, can be disastrous for less experienced investors. Imagine waking up to find an investment worth double, only to see it plunge 30% by the end of the day. This level of instability is what makes the cryptocurrency market fascinating but risky. Curiously, this volatility is both a natural characteristic and a learning tool for those venturing into this space. Another significant challenge is the lack of regulation. Unlike traditional markets, such as stocks or real estate, the cryptocurrency market operates largely outside the control of governments or financial institutions. This can be extraordinary for those who value economic freedom, but also opens doors for frauds and scams. Examples like the collapse of famous exchanges like FTX illustrate how the lack of oversight can lead to massive losses for investors. The warning is clear. In this market, curiosity is welcome, but caution is mandatory. Furthermore, there is the technical challenge. Investing in cryptocurrencies often requires basic knowledge of technology. Terms like wallet, blockchain, and private key can be intimidating for beginners. A simple mistake, such as forgetting your access password or sending funds to the wrong address, can result in total loss of investment. In one famous case, an investor lost millions of dollars because he couldn't remember the password to his digital vault. It's a reminder that prior learning is essential in this space. Cyber attacks also present a real and historic risk in the world of cryptocurrencies. Exchanges have been hacked, digital wallets breached, and millions of dollars stolen. Even the most trusted platforms are not immune. The lesson here is clear. Choosing secure wallets, enabling two-factor authentication, and never sharing sensitive information are essential practices for safeguarding your wealth. An additional concern is regulatory instability. Countries like China and India have imposed severe restrictions on cryptocurrency use, while others, like El Salvador, have embraced them enthusiastically, making Bitcoin official currency. This global ambiguity creates uncertainties for investors. Will cryptocurrencies be banned or widely adopted in the future? This is one of the big mysteries that keep the market in a constant state of alert. There's also the risk of emotional dependence. The excitement of seeing an asset's value rise can lead to euphoria, while sharp declines may cause panic. It's a true psychological test that requires discipline and planning. A practical tip for mitigating this risk is to never invest more than you're willing to lose and, of course, to diversify your assets, including less volatile options in your portfolio. Finally, perhaps the biggest challenge is distinguishing what's real from what's speculation. Amidst promises of extraordinary profits, fraudulent projects arise, preying on investors' naivety. Analyzing the viability, purpose, and team behind the project is crucial before investing. After all, risks are high, but opportunities, as we'll see, can also be extraordinary when approached with intelligence and strategy. Extraordinary opportunities in the cryptocurrency market despite the risks. The cryptocurrency market offers incredible opportunities for those who know how to explore its potential with intelligence. One of the most attractive aspects of this universe is the possibility of high financial returns. Strategic investments in emerging coins, for example, can turn small contributions into significant fortunes. Those who bought Bitcoin early for pennies have seen its value soar into the tens of thousands of dollars. Cases like Ethereum, which has risen more than 10,000% since its launch, continue to fuel the curiosity of new investors. Beyond direct appreciation, cryptocurrencies introduce innovations that could be revolutionary. Smart contracts, offered by platforms like Ethereum, are transforming sectors such as real estate and law, automating processes and eliminating intermediaries. Imagine selling a house without needing notaries or brokers, with everything validated digitally and without bureaucracy. It's this type of innovation that makes blockchain a technological phenomenon beyond just finance. Another intriguing opportunity is staking, a way to earn rewards simply by holding your cryptocurrencies in a wallet. It's like earning interest by leaving your money in a savings account, but in this case, with generally much higher returns. Platforms like Cardano and Solana offer staking for their investors, creating a passive income alternative. For those looking to maximize gains without being trapped by extreme volatility, this could be an attractive option. The market also opens doors for diversification. There are thousands of cryptocurrencies available, each with distinct proposals. Some focus on privacy, like Monero and Zcash, while others, like Chainlink, integrate the physical world with the digital. Choosing projects with long-term potential can be challenging, but it can also be extraordinarily rewarding. For those wanting to explore, the key word is research. Analyzing white papers, understanding the technology, and following industry trends are crucial steps. Additionally, the market for NFTs, non-fungible tokens, is emerging as a significant branch of cryptocurrencies. Artists, musicians, and creators have used NFTs to monetize their work in unprecedented ways. Digital artworks, like the ones sold by Beeple for $69 million, demonstrate how this segment is challenging the traditional market. For the most curious, investing in NFTs is like entering a digital museum where each piece can be unique and incredibly valuable. Another noteworthy point is financial inclusion. In regions where banks are inaccessible, cryptocurrencies are offering smart and practical alternatives. Countries in Africa and Latin America have adopted blockchain-based digital wallets to facilitate transfers and payments. This new approach could change lives, bringing economic autonomy to millions who were previously excluded from the traditional financial system. Finally, perhaps the most valuable opportunity is education. Understanding cryptocurrencies is not just about investing. It's about positioning yourself at the center of a technological and economic revolution. Knowledge is power, and being ahead of this curve could make all the difference between following trends and creating new possibilities. In the next step, we'll see how cryptocurrencies are influencing the global economy, opening doors to a future that few could have imagined. The influence of cryptocurrencies on the global economy. Cryptocurrencies are not just a technological curiosity. They are shaping the future of the global economy in extraordinary ways. Since Bitcoin's emergence in 2009, these digital currencies have challenged traditional financial systems and forced governments, companies, and institutions to rethink their approaches. The mere fact that a decentralized currency like Bitcoin is recognized in international markets demonstrates its growing influence and the power blockchain has in restructuring economies. One of the most evident impacts is financial decentralization. By eliminating intermediaries like banks and governments, cryptocurrencies are enabling faster, cheaper, and more accessible transactions. This is especially noticeable in developing countries, where international remittances used to be slow and costly. Today, with a digital wallet, anyone can send money to the other side of the world in minutes. It's a practical example of how technology can solve historical problems of economic accessibility. Another influential reflection is the rise of economic digitization. Companies of all sizes are starting to accept cryptocurrencies as a form of payment, including giants like Microsoft, Shopify, and even small local cafes. This not only broadens consumer possibilities, but also attracts new customers who seek innovation and convenience. The curiosity surrounding how cryptocurrencies work is encouraging both consumers and entrepreneurs to dive into this universe, creating a cycle of technological adaptation and adoption. On the other hand, governments around the world are facing the challenge of regulating this emerging market. China, for example, has taken a harsh approach, banning cryptocurrency transactions and miners, while El Salvador has taken a historic step by making Bitcoin official currency. These decisions show how cryptocurrencies are already influential enough to shape economic policies, creating tensions and debates about their viability and control. Another significant impact is in the realm of value reserves. Many investors, and even large companies, have started to treat Bitcoin as digital gold. This is due to its limited supply, which protects against inflation, and its independence from monetary policies. Companies like Tesla and MicroStrategy have already invested billions in Bitcoin, consolidating its position as a relevant financial asset. This movement has a cascading effect, encouraging other investors to view cryptocurrencies as a smart alternative to traditional assets. The job market is also feeling the effects. The blockchain sector is generating new opportunities in areas such as software development, financial analysis, and even marketing. Curious and eager to learn individuals are finding this market a chance for professional growth. Furthermore, the decentralization of work platforms such as the rise of freelancers being paid in cryptocurrencies, is altering the dynamics of the global economy in an innovative way. Finally, the most profound impact might be the questioning cryptocurrencies bring to the very definition of money. In a world where traditional currencies are controlled by central authorities, Bitcoin and its peers offer a bold alternative, a system that belongs to everyone but isn't controlled by anyone. This raises the question, are we witnessing the birth of a new economic model, or just a passing phase? This is the point where cryptocurrencies stop being just an investment and become a transformative force. As we dive deeper, it's important to explore how this transformation is directly affecting traditional financial institutions and how they are reacting to adapt to this new scenario. How financial institutions are reacting to cryptocurrencies. The arrival of cryptocurrencies has brought extraordinary challenges to traditional financial institutions, but it has also opened doors for innovation and adaptation. Banks and institutions that once saw Bitcoin as a marginal phenomenon are now incorporating blockchain elements into their operations. This shift in attitude reflects the pressure cryptocurrencies exert on the traditional financial system, forcing historic companies to reinvent themselves to avoid becoming obsolete. Initially, many financial institutions resisted cryptocurrencies. Major names like JP Morgan publicly criticized Bitcoin, calling it a fraud in its early years. However, time and the growing influence of cryptocurrencies changed the tone of these companies. Today, JP Morgan not only offers Bitcoin-related services to its high-net-worth clients, but has also developed its own cryptocurrency, the JPM coin. It's fascinating to see how initial skepticism has turned into a race to adopt what was once feared. Another influential example comes from central banks around the world. Many are exploring the idea of creating their own digital currencies, known as CBDCs, central bank digital currencies. China is leading this movement with the digital yuan, already in broad testing stages. What's curious is that, while inspired by cryptocurrencies, CBDCs are not decentralized. Instead, they aim to combine technological innovation with central control, offering governments a powerful tool to modernize the financial system. Moreover, cryptocurrency exchanges are challenging traditional financial institutions by offering innovative services such as loans and interest on digital assets. Platforms like Binance and Coinbase are becoming true banks of the future, offering alternatives that eliminate banking fees and simplify transactions. This competition has forced banks to rethink their fee structures and adopt technologies they once ignored. Payment companies like Visa and MasterCard have also kept pace. Both have integrated cryptocurrencies into their systems, allowing users to make purchases with Bitcoin and other digital currencies at millions of establishments worldwide. This is a historic milestone, as it directly connects the digital universe with the real economy, expanding the acceptance and relevance of cryptocurrencies. An intriguing aspect is the increasing mergers and partnerships between traditional sectors and the crypto market. Banks are joining forces with blockchain startups to create innovative solutions, such as real-time payment systems and global transaction networks. This collaboration shows that, instead of competing, many players are choosing to unite forces, exploring the extraordinary potential of cryptocurrencies to enhance their services. Finally, it's interesting to note how cryptocurrencies are forcing a shift in mindset within financial institutions. Initial distrust has given way to a more strategic and intelligent approach, where banks seek to adapt to market trends while exploring opportunities. However, the true impact of this transformation is still in its early stages. What we will see next is how cryptocurrencies can directly affect people's relationship with money and consumption. The impact of cryptocurrencies on consumption and people's relationship with money. Cryptocurrencies are radically changing the way people deal with money and consumption. Once viewed as a distant concept, they are now accepted in real transactions. such as purchasing real estate, automobiles, and even paying for daily services like streaming subscriptions. This growing adoption is transforming the relationship people have with money, bringing more autonomy, innovation, and curiosity about the future of consumption. One of the most extraordinary changes is the ability to conduct transactions without intermediaries. With a simple digital wallet, it's possible to transfer funds directly between two parties, eliminating bank fees and delays. Imagine buying a coffee in another country using Bitcoin without needing to exchange currencies or pay fees. This convenience is encouraging consumers to explore cryptocurrencies as a practical payment method. Furthermore, cryptocurrencies are promoting a new mindset about personal finance. Due to their high volatility, they teach investors to be more strategic and informed about their spending and investments. Many use stablecoins, stable digital currencies, to save and protect their wealth in unstable markets. These coins, tied to the dollar or other assets, become a smart alternative to save without relying on banks. Another curious phenomenon is the emergence of global communities around blockchain projects. Those who acquire or use cryptocurrencies often engage in networks of people who share ideas, strategies, and information. This sense of community encourages learning and knowledge exchange, altering how people view money not as something limited to their location, but as a global and collaborative tool. The possibility of anonymity in transactions also attracts many consumers, especially in times when financial privacy is under debate. This allows individuals to make purchases without exposing their personal data, an extraordinary advantage in an increasingly digital world. On the other hand, this also raises discussions about the misuse of cryptocurrencies, such as in illegal activities, which remains an ethical and regulatory mystery. Another significant impact is on the younger generation, who are the biggest enthusiasts of this market. Many millennials and members of Generation Z are adopting cryptocurrencies as a form of investment and consumption. This generation, raised in the digital age, sees digital currencies as a natural part of their everyday lives, driving the widespread acceptance of cryptocurrencies. It's amazing how, for many, the concept of a physical wallet is already a thing of the past. Additionally, cryptocurrencies provide an innovative solution for people living in regions with limited financial systems. In countries with high inflation or limited access to banks, they are enabling individuals to store wealth, buy products, and participate in the global economy. An example of this is the increasing use of Bitcoin in countries like Venezuela, where the local currency has lost much of its value. Finally, cryptocurrencies are not just redefining how we spend, but how we think about money. They challenge traditional models and offer a futuristic vision of a more inclusive and decentralized financial system. As we move forward, the question remains, how far can this transformation take us? In the next section, we'll explore how these changes might shape the future of global economies. The future of cryptocurrencies and their role in the global economy. The future of cryptocurrencies is shrouded in a mix of curiosity and mystery. But what's certain is that they are destined to play an extraordinary role in the global economy. As the world becomes more digital, traditional currencies may give way to decentralized assets like Bitcoin and Ethereum. The question is no longer whether cryptocurrencies will have an influence, but to what extent they can reshape the economic pillars we know. One of the most influential perspectives is the widespread adoption of cryptocurrencies as a form of payment. As companies and governments adapt to blockchain technologies, it's likely that in the near future, paying bills, taxes, and even salaries with digital currencies will become common. Imagine a global economy where borders no longer limit financial transactions, reducing costs and making consumption more practical. This idea is already underway with initiatives like CBDCs, which promise to integrate cryptocurrencies into the traditional financial system. Moreover, cryptocurrencies have the potential to create a more inclusive financial system. In regions where banks are inaccessible or the local currency is unstable, people can use digital assets to protect their wealth and participate in global trade. This decentralization is more than just a technological innovation. It's an economic revolution. In the future, developing countries may lead the adoption of cryptocurrencies, balancing the economic game on a global scale. Another fascinating point is how blockchain technology can go beyond the concept of digital currencies. Smart contracts, NFTs, and decentralized finance DeFi platforms are redefining how we interact with money and financial services. For example, smart contracts could eliminate bureaucracy and extra costs, automating complex transactions like buying real estate or insurance. This innovative vision could be the catalyst for a new economic system based on efficiency and transparency. Still, the future of cryptocurrencies depends on how governments and regulators approach the sector. Some nations already recognize the historical potential of these technologies and are working to create environments friendly to innovation. On the other hand, the lack of global consensus could create significant barriers, hindering large-scale adoption. The balance between regulation and freedom will be crucial in determining the lasting impact of cryptocurrencies on the global economy. Additionally, environmental impact will be an influential factor. Cryptocurrency mining, especially Bitcoin, consumes large amounts of energy, which has garnered significant criticism. However, the sector is evolving, with technologies like proof-of-stake promising to drastically reduce energy consumption. Smart and sustainable solutions could ensure that cryptocurrencies are both environmentally responsible and economically viable in the future. The involvement of major institutions is also an indicator of how cryptocurrencies will continue to expand. Banks, tech companies, and investment funds are not just exploring but already integrating digital currencies into their operations. Collaboration between these players and the crypto market could lead to a hybrid economy, where the traditional and the innovative coexist. Finally, the future of cryptocurrencies is not just a matter of technology or economics, but of mindset. We are witnessing the birth of a system that challenges historical concepts of money, power, and control. As we move to the next topic, the question that remains is, how will cryptocurrencies influence how we think, act, and connect in the financial world and beyond?